Hello, in this presentation we will be taking a look at a problem that will be very similar to a homework and or assignment. This will be the problem. We're going to be working it in an Excel worksheet here. I recommend putting it into a similar Excel worksheet because it'll help you to do the calculations, it'll help you to learn Excel, and it'll help you to do the problem again if you need to do so. Once it's in here, then you can take the information from here and then put it into another format such as a Connect format if you need to at that point. So here's the problem. The company uses a perpetual inventory system. It entered into the following purchase and sales transactions for March. So we have the information here that we're going to first plug that into our worksheet. All right, so we got our worksheet side by side, Excel worksheet over here, the problem on this side, and we're going to first compute cost of goods available for sale and the number of units available for sale using this table here. So we're going to start off with the beginning. Here's the numbers. We got the beginning of March 1st, beginning units. So the number of units, then I'm going to select tab, and that'll take me to the next cell at $50 per unit. I'm going to select tab, taking us to the next cell. So if this is the number of units, that's the cost per unit. We're going to multiply those two out. I'm going to hit equals in order to do that. Point to the 100, that's in cell B8. We can see in the formula bar times the 50, and then we're going to select enter, and then go to the next section. Notice it's formatted with a comma because of the format of the cell. So then on we're going to say purchases here. I'm going to skip a cell under the purchases, and on March 5th here we have another 400 units, 400 at a rate, they're saying of 55, then I'm going to multiply that out. So we purchased another 400 units equals that 400 times 55. Note that the price went up, so we're buying our inventory, whatever our inventory is, costs more, and over time that's going to be generally the case. A lot of times things cost more over time simply because of inflation. So all else equal, just because of inflation, the cost of things usually rise. So that's going to be our problem with inventory that we're going to have to deal with and cope with in our inventory valuation methods. So then on March 18th here, we have another 120 tab at, it says $60 tab. Then we're going to multiply that out equals number of units, 120 times the $60. And then we have the last purchase happening on March 25th. Notice we're skipping the sales. We're not talking about the sales right now. We're just looking at the purchases. Got 200 units at $62 tab. That equals, I'm going to point to the 200 times the 60 and enter. So what could we have sold over this time period based on what we had available to sell throughout the month of March? We're going to equals SUM. I'm going to sum this up. We're adding the 100, the 400, the 120, and the 200. We had 820 units that we could have sold for a total cost, summing this up, of 522.72 and so on, bringing us to 46,600. That's what we could have sold. That's our total cost. Then we're going to compute the number of units in the ending inventory. So how many units were still left? Well, we had units available that we just calculated equals that 820. And then we're going to say that, how much did we sell? Less sales in units. The units that we sold are shown here. We sold 420 units on the 9th, plus we sold another 29 units. On the 29th, we sold another 160 units. Therefore, we have ending inventory of equals this 820 minus the 580. That's how much we have left in ending inventory. All right, so now we're going to go down to our costing methods here. We're going to take a look at the different ways we can value using FIFO, LIFO, weighted average are the first three we will start with. We're going to start with FIFO and see what the cost flow would be according to this cost flow if we were on a FIFO method. So we're going to start off here. Once again, we have March 1st, so we're going to say 3-1. At the beginning, notice we have three columns. We have the purchases, we have the cost of merchandise, and the inventory. So we're going to start off, this is what's going to be an ending inventory on the balance sheet. They're saying as of the beginning of the time period, we have a quantity of 100 units at a cost of, we're saying 50. Therefore, if we multiply that out, we have 100 units times 50. That's a total cost of 5,000. I'm just going to bring that over to the end here. That's what we're starting off with in inventory. If we were to look at a trial balance such as this, we'd have 5,000 in inventory, matching that number there. Then we're going to see what happens over time. So I'm going to grab this by left clicking in the top and snap it back over here, and then look over here and continue on. So on March 5th, so now we're going to say on 3/5, and it'll format the cell in terms of a month because that's the format of the cell. We purchased 400 units at $55. So we purchased another 400 units tab at $55. So remember that the price went up from 50 to 55. Then we're going to multiply that out equals, I'm going to left clicking 2 to the 400 times left once and then enter. So 400 times 55 is 22. Then I'm going to make this large. And then I want to take a look at what is in ending inventory after this purchase. So after this purchase, what does that do to ending inventory? I want to put everything below this date line here. So I want to reflect ending inventory below the date line here. These 100 units are still there. So what I'm going to do is I'm just going to copy these 3 cells, highlighting, right click, copy them, and I'm going to paste them as of this date line, right click, pasting them 1, 2, 3, just the values. So we still have that 100 units at 5,000. Now we purchased another 400 units at 22. This under the purchase column. So I'm going to highlight these, right click, copy those, put those in cell 09, right click, paste them 1, 2, 3. So what do we have as of this date line? We have a total cost of these two here. That's where I want to sum that up, and I want to put that on the right hand side right here. So in order to do that, I'm going to hit sum or equals SUM. Then I could double click the sum function, and I just want to highlight the 5 and the 22. That's what should be in ending inventory at the end of this point. Now, I'm going to post a journal entry just so we can see what is happening over here in terms of a trial balance. Here's our 500 units. If we bought another 22, then we're going to debit inventory. Inventory has a debit balance. We're going to make it go up by doing the same thing to it, which is another debit. So we're going to say 22,000. And that's that 22 right there. If I debit something, I'm also going to have to credit something. I'm going to assume we bought it on account, meaning accounts payable is going to go up. I'm going to put my cursor in Z13 equals the 22, enter, and it goes up to 27. That's our balance here. We're out of balance. I'm going to post the other side to payable equals the credit. That's a credit. That's a credit. Making the credit go up in the credit direction, back in balance here. So now our inventory ties out to the trial balance to what we have here on our worksheet. Next item, I'm gonna snap this back over here again, pulling it to the side. On March 9th, we had a sale now of 420 units at $85. So that $85 is the sales price, not the cost. That's what we sold it for. We purchased it for like 50 or 55. So we sold it for 85, we purchased it for 50 or 55. We're not gonna put that in the purchase column. Obviously, we're gonna put that in the sales column. So I'm gonna put that information in the sales column here. Now, we know we sold 420 units. The question is, which units did we sell? Because we have 100 of them, which cost $50, and we have 400 of them that cost $55. Under the FIFO method, we are going to assume we sold the old ones. We're assuming we're selling this old ones at $50 first, then going into the newer ones at $55. Therefore, if we sold 400, we wipe these out. These are gone. We sold 100 units, and we're assuming they cost $50. We don't know exactly which units we sold. This times this, but that's the assumption we're making under the FIFO method. And that means that if we sold 420, I'm going to say equals 420 that we sold total minus this 100, that means that we sold another 320 out of these 400. So we sold all of these, 320 of those to come up with the 420. These cost $55, and we're going to say that equals this times this. So that's going to be the sales that we made, the cost of the sales, the cost of the merchandise that we sold, we're assuming is $22,600 based on this. How much then do we have left in ending inventory? We had before 500 units, 100 at 50, 400 at 55. These got wiped out. I'm going to indicate that by saying this now equals that 100, which is now minus this got wiped out. So the $55 units, they're $50 units. And if we multiply that out, there's 0 at 50, so obviously we have 0 left. These 400 units, we sold 320 of them. Therefore, we can represent that by saying this equals the 400 minus the 320 tab. They cost $55 tab. If we multiply that out, equals 80 times 55 tab. Therefore, the total we have as of this date, as of this line, is the sum of these two. So that equals the sum of the 0 and the 44. giving us, of course, the 4-4. I'm going to make this large now and take a look at the journal entry.